All right. So market analysis and tools. Let's just get straight into it. Okay, I think I may have to turn my video off at some point because I need to move this around. So fundamental, okay, basically there are three basic market analysis, right? We have the fundamental analysis. This is the first one. And what does that mean? The fundamental analysis is a way of looking at the forex market by analyzing economic, social, and political forces that may affect currency prices. Basically, fundamental analysis is just news, like how things are happening in the market and how it may affect the price movement. It involves poring over economic data reports and news headlines. Anything that has to do with news, posts, tweets that may affect the market is what fundamental analysis is about. I think there was a period in time where somebody as powerful, as influential as Elon Musk, when he makes some tweets, and then before you know it, the crypto market is making some movement, that because he's the kind of person that is influential. So sometimes in the market as a trader, you may have to look at these factors before you start, go into your trading, before you finalize your market decision, before you finalize your decision, whether you're going in for a buy or a sell, or you're sitting out the market. And then in crypto, fundamental analysis is a method used to determine an asset's intrinsic value by looking at different internal and external factors. This includes reputation, competitors, team, advisors, and market capitalism, and all those things that are written. Basically, in crypto, there's a term that they say DYOR, like do your own research. That is what fundamental analysis is. Like you want to understand what this asset is talking about, what's the value that it is given, the tokenomics, the competitors, all these things put together can make you now decide whether you're going to buy a crypto or not. That's what fundamental analysis is in the market. But in forex, we aren't buying to hold. We aren't buying Euro USD, for instance, to put now. There's nothing like portfolio in forex. You're just trading it on your leverage. You are just buying or you're selling. So, but still, when you're buying and selling, you still have to understand some things like your fundamental analysis. And what tools do you use to do your fundamental analysis? We have Forex Factory, FX Street, Finviz, Dextros. That's Dextros is actually for crypto. Forex Factory gives you a news, it's like, I know majority of us will be familiar with it. Like that's the site we look to see if there is news, maybe the currency pair has news, and if it's going to have impact in the trade, because it happens actually. Even if you've done, we're still going to talk about the other ones, some things, and then the market is actually supposed to move in a certain way, but because that currency pair has a news, maybe they are releasing a press statement, something, whatever, and then it just goes against you entirely. So that's why you need to have an understanding of fundamental analysis. Now, the second one is technical analysis. Technical analysis is a framework. That's what we are going to be doing in depth today, right? So it is the framework in which traders study price movement. In TA is also technical analysis. It considers price, looks at historical trends and data to identify future opportunities. Basically, when it comes to technical analysis, we don't just look at news. We don't just look at things that are happening, maybe like a press statement or whatever, but rather we're looking at charts. That's why in this the ending part of this slide, I wrote data chart indicators. That's what technical analysis focuses on. You want to maximize your charts. You are looking at your chart to understand what the market is saying. And then the market is not just, is going to, most of the time, repeat what it has done before. So that's why, yes, meaning a person can look at historical price movement and determine the current trading conditions and potential price movement. TA predicts future price action by looking at past trends. So that means if you want to understand what TA is, you actually have to get to understand what price action is. You are going to be looking at past trends, things for you to make informed decisions in the market. As a technical analyst, you are looking at similar patterns that have been formed in the past and will form trade ideas, believing that price could possibly act the same way that it did before. Because it's not like you are predicting the market, because it's technical analysis is more about possibility than prediction. You are not predicting that, oh, the market is going to like automatically do this, but you can always look at the things that have happened in the past to understand what will happen right now, because the market doesn't do anything new. That's just the truth. The market isn't doing anything strange, it's not going to conjure movement or bring things that are strange. It's going to do what it has done before. I'm still going to show everybody the practical part of what I mean, but I just want everybody to have this slide and understand what I'm saying. So the tools that we use for technical analysis most of the time, TradingView. TradingView is the home of traders. It's where you're going to be doing your markup, your chart markup, putting your alerts, waiting for your price to come, or, before you make your decisions. So we are going to get to that. Now, the last market analysis is the sentimental analysis. And that just defines how investors feel about a particular market or financial instrument. Why? Okay, about a financial, basically your feelings. Like sentimental analysis is your feelings. You're not marking up your chart, apart from the fact that you've marked up your chart, or maybe you've looked at other things. Sometimes your feelings can also, be like a determinant in how you're going to make your final decision. It can happen like that. So why applying sound technical and fundamental analysis is key, very, very key in trading. Having an additional feel for the market consensus can add depth to a trader's view of Forex and even other markets. So let's say, for instance, now you've done your analysis, everybody is maybe on a pair like BTC USD, like crypto BTC USD, and then everybody is suddenly going bullish on it. It's like, want to buy, we're buying. But for some reasons, you feel like the fact that everybody is going to buy may actually not make the market buy, right? And then you base your decision on that, and then you go against the majority, and for some reasons it goes in your way. It can happen like that. But then that's because you probably put in some of the other factors, the technical analysis and the fundamental analysis. So, which for some people they be like, oh, yeah, they do more of. There are some people that are actually fundamental traders. I don't know for what reason why they be like that. Like they just look out for news, they trade news. Like some people trade news, they wait for news to happen and then they make their decisions based on that. Although, yeah, they can put a little bit of fundamental analysis on it, but most of the time they are fundamental traders. But if, as a real trader, as a sound trader, you want to combine all these three in your analysis. You want to understand news, you want to understand the structure of the market, the movement the market is making, so that you can make your final informed decision in trading. Now, the next thing I want to talk about, we're almost moving on to the end of the slide, and then we'll move to the practical aspects. The market faces. Market faces, I put it as the architecture of price movement, right? Because the way market moves, like, okay, market has a certain structure to it, a certain movement to it. There's a way it's moving. And then the first one, it's the consolidation. At a consolidation, I know some of these names might be familiar to some people. That's okay, we are all learning. So consolidation means that there is no defined movement between the market, like the market is just moving in a range, moving up and down in the same range like that. And then at the expansion phase, the market is breaking out of the consolidation, whether on the upward or downward movement. And then you now have the trending. Then the trending is the upward, like I said, and then the downward. So when the market is moving a defined phase, like it's moving it's creating a series of higher highs and higher lows. You can say that the market is trending. So these are the three market phases that are that we have. And then now the other components that we also put in our trading market structure. Basically, I think there are three types of market structure. The trending market, that means it's clear that the market is going upward or downward. It's creating a series of higher highs, higher lows, lower highs, and like that. And then you have your moving average, which is an indicator that you can use in your trading, and demand and supply, trend lines, support and resistance. Okay, I've already talked about the marketplaces. So before we go into this, let's just go into trading view. And begin the practical aspect of this session. All right, great. So like I said, trading view is the home of traders. This is where you are going to be doing your markup and your it's not sharing, your technical analysis. I need to stop sharing this one. Okay, so yeah, it should share properly now. If you are following so far, if I have not brought you to live, please drop 77 in the chat box. Drop 111 actually in the chat box. If you are still following, drop 111 in the chat box. All right, thank you so much. Okay, so let's just ask, like, we want to open a new trading view account. So trading view is, like I said, it's where you do your technical analysis on. So you just search trading view. If you don't have an account, you can just follow me. This is what I'll be doing right here. You click on it. It brings you here. Already, an account is on this one. So, okay, an account is on it. I can't exactly sign up. But if you don't have an account, you see an option to sign up or sign in, and then you do your necessary. You can use your email address or your social media account. And then when you log in, you're going to see this. Okay. Right here. Okay, the currency pairs have already been added anyway. So if you don't have the currency pair, you just click on the let me click on this. It should show, go to advanced charts. See more on advanced chart, and then you go next to somebody is writing on my screen. Please stop writing on my screen. Honestly, I can't even remember how to clean the write-up. I don't know. Just give me a minute while I figure this out. Can't remember. Okay, I should stop sharing and reshare. Okay, all right. Okay, thank you. Okay, thank you so much. That works. Sign in. You won't have all this, so I'm just going to take all these things off. Oh, my. I'm going to take all these ones off so that it will look like a baby trading view for everybody. Which other indicator do I have? Okay, now, yes, so it's going to look like this. And then you see some messages popping up, like that one that keeps coming up, and that's because my trading view, this account is not upgraded. So you can actually upgrade your trading view. You subscribe to it, and it gives you, basically gives you more added, gives you added like advantages, like out more indicators. You can have multiple alerts and all that. Now let's talk about trading view. So this is what you can't see my, please can everybody see my screen? Please can everybody see my screen? Okay. The person that can't see it, please probably should log out and log in again, because majority can see my screen. All right, thank you guys. So I talked about a trending market. Basically, that means a market that has a clear direction. Is either going up or going down. Like this market now, for instance, you can see that it's defined in a way. You see it's doing like it's going down. So that means this is a downtrend. And then when the market is like in a phase like this, something as tiny as this is a consolidating market, because the market is just moving in a range. It's not clear. You can't define, is it going up, is it going down? You can't really see. But in all of this, and then which other one? I think that's it. And then in all of this, whether clear or unclear movements, the market creates a series of what's called support and resistance. And basically that means where buyers and sellers find equilibrium. Like it's also called a floor and the roof of the market. Like the price got there and just found a place to stay as a support. If it is selling, like the market is selling, like in this situation, market is selling, it's coming down, and then he found like a floor, something like a balance to hold it. So this is a support. And if, for instance, the market is going and then it hits a certain level where it can't go beyond it, that's what is called a resistance. And in this market, like the way I'm pointing at it now, you can see this is a resistance, this is a support. Even in this like uncleared movement, this particular range. That's what I'm talking about. This consolidation. This looks like it's going up. On this side, it's coming down. So let me explain the basic things that you might need as a beginner, or you will need as a beginner on TradingView. I'm going to start with this. That there isn't so much info on this, maybe like razor, all these things. Let me explain this one. The trend line, this what's the word now? This tool is used for you to, like, you want to mark a trend line, or like you want to get a defined movement in the market, if it is going up or down. To confirm it, you can just click on it. When you open this thing, it brings all these options: trend line, arrow, ray, info line, extend, all these things. Just click on it and then bring it to your, let me do that again. You bring it here and then you draw like this. This is the purpose of the trend line, just to identify markets, the prices, just to identify a structure in the market, to identify the structure of the price movement in the market. And that's for the trend line. Then the next thing is, okay, apart from the trend line, you can also use your arrow to probably just want to indicate you want to point at a price movement. You want to be sure this is, whatever, like it's an arrow like that. Another tool that you may also need, that you would also need as a beginner, it's your definitely your horizontal line. Look right here. You will definitely need your horizontal line, and that's for you to place for your level of, to identify specific level of support and resistance. You put it there. This shows that, okay, yes, I'm trying to say the market got here. This is a support. And then you put another, you want to identify a resistance, the market is here. This is the resistance. And then you can, of course, you can color code your trend, your line, your horizontal lines, and even your trend lines. Everything you can change the color You can even change the colors of your candles. Maybe psychologically you feel like red and green is too, you want to adjust. You can actually change your candles to any color that you choose. Just tap on it and then change it right here. You're done. So for your color coding, like, that resistance, the idea with resistance is that the market got there and sold. Like, look at it in this situation. It got this particular point and started selling. So this is the resistance. And then you can say that you're color coding it as red. Put it there as red. And then for the support, markets got there and started buying. So you can color code it as green, like that, or whatever color that you choose. So that's another tool that you definitely need. And also it goes, your horizontal line, it goes like straight, it goes in a long way. It covers both the past and it covers the present and the past prices. But for instance, this tool here, this horizontal ray, it just, maybe you just want to identify a specific line. It goes into the future, but it doesn't really cover the past like that. So this one here, that's for your horizontal ray. So what other one is, this, you may not necessarily need the vertical line for now, but you can just see what it's used for. So I'm just going to rush through the remaining ones. The next one right here is your fib retracement tool. So this is a little bit, this tool is a little bit advanced or maybe intermediary, but you still have to understand it before you start using it. It's a tool that is also used to when you start analyzing your market, identifying your structures and all those things, and then you want to put more, should I say, confidence into your analysis before you go in for a trade. You are going to probably need it, and then it's just, and you also have to put settings on it. Definitely. So this is how you put your fib retracement tool. If you want to buy, you start from the swing low to swing high. Like I said, you may not totally understand now. For a beginner may not totally understand, but people that already know what this is, I know it's not be straight to them. So this is it. And then if you're going in for a sell, swing high to swing low to identify the lowest price. So this is how you use your fib retracement tool. And then the next tool here that you may also need is the trend-based, but isn't totally used, but I'm just going to focus on the beginner ones. This one I also needed, but for now, not yet. So the brush to clean stuff, and this one, this rectangle is actually a tool that is needed. It's used to identify zones for you to just take it out. When you take your tool, when you take your rectangle tool, you bring it to wherever, what's it called, the zone you want to identify. Instead of your horizontal lines just cover a line, but maybe you want to cover zones, like it's more than a line, then you don't want to be putting line upon line one by one. You can just use this box to bring it right. It covers more than a line, more than a price. It just, like this price here, 24 something to this, okay, this is BTC, 23.8 to 24.1. It covers that zone. So this tool is also needed as a beginner in case you don't know what it's for. That's what it is used for. And then if you want to like extend it to the future, you can just use this to change it or put your coordinates on it and just put 0, 0, 0, 0, and then it takes it into the future. It covers it like that. And let's see another tool right here. Okay, path. Maybe you want to identify a movement. You do it like that. Just what I just did. I'm going to do it again. You bring it. Maybe you want to mark up your chart, and then when you come back to it, you want to understand what you have done. You just do this, like, okay, I want price to come here, and you stop, 2, 3, double tap, and that's it. And what other tool is needed right here? Text. Maybe you want to write something out. You remember buying at this zone. Okay, you bring it right here. Just put it. You want to change, you can change your font, you can change your color, whatever. So you put it here. You want to say you want to buy at this zone. What other one? Call out. You want to, instead of you just writing it as a text, you want to make it bold. You just write it here. Buying again. I'm just going to put buying again, and that's a call out. So these things are, you know, as you start trading, you want to be having it so that it makes it, as a beginner, of course, even if you're starting as a beginner, you're starting as somebody that is copying and pasting, but as you advance, you don't want to be a baby. I believe that nobody wants to be a baby forever. You want to advance, you want to start understanding how to do some certain things. So this trading view is actually very, very, very important. So you put it there, buying again. Which other tool is also important right here for beginner? The long position, basically, maybe you for you to determine your stop loss, take profit. This is what it's used for. This is the long. This is the long and short. So you want to start determining your stop loss and your take profit. This is the tool used for, and it also gives you the risk to reward ratio here, right here. We won't go too deep into that. If it's a sell, that's a short, right? It puts it there. You are just going to adjust it as you go. As you decide, like, okay, this is my stop loss zone. This is my take profit zone. Okay, I think somebody asked a question. Okay, which parts do you want me to retake? It's just specify, I don't know which one. So you that's for your long position. Other basic ones, maybe arrow, you want to point at it. When you come back and it tells you that this is what you're talking about, that's just what it's for. And then you can have multiple of it. That's going away. Can have multiple of it, drop it here, drop it there. So, okay, the stop loss is the tool. This is the tool that you use to measure your stop loss and take profit. It's when you drop it, you're just going to drag it to, okay, this is a long. Let me delete it. Let me bring it up again. This is a long position. That means you are going in for a buy. If you are going in long, if you are going long, that means you're going in for a buy. Maybe you want to buy it here. You just place it. Your take profit, and then this is your stop loss. The red area is like your stop loss zone. And I said that it also gives you your risk to reward. This is when you start, like, maybe doing your own analysis, and then you want to determine your stop loss and your take profits. So this is the tool you can use to put your target profit, target stop loss. And also, even for the trade ideas that are sent in, if you want to know the risk to reward for yourself, probably is good enough for you. If you can determine, you can actually decide to take a trade or not. You can use this tool to say, oh, is this risk to reward good for me? And this is just basically how you do it. It's like, okay, fine, I'm risking this amount to make this amount. That's what risk to reward is. This is the long. Now, if you are going in for a short, that's a sell. You go up because you're selling, and then your profit is down. Like, you're taking your profit downwards. But if it is long, you're taking your profit upwards. So this is just different. This is a buy, this is a sell. So that's just your those tools. I hope my screen is not too busy now. The ruler, basically, maybe you want to measure pips, candles, bars, like this. It covers your it covers it, but it doesn't stay. It doesn't stay, unlike all these ones that stay. Once you tap it, tap the screen, it disappears. So whatever you want to measure, you just use it for that. Then you zoom in, magnets, and this stay in drawing mode. I actually like it for maybe when I want to start. Let me delete all these things. Also, your delete icon. You can use it to remove everything at once. Even if you have indicators on it, it just removes it. Remove everything is gone at once instead of deleting one after the other. So as I was saying, the stay in drawing mode, I like it because maybe I want to start doing my identifying support and resistance for a while. So I'm just going to tap on it and do this, do this, do this, do that, like that. So that I won't be coming back to pick it one after the other, like, you know, smart work now. So, and then when you are done, you'll click it. And if you want to hide all your drawings, this is it. Basically, the simple things that you need as a beginner are just what I've explained in this one. So now as I was talking about the market structure phases. Oh, okay, it's back. Forgot that I just eat them. Can disappear, thank you. Okay. Let's use I'm gonna say let's use another. Okay, if you want to add a pair also, I think that's also important. You want to add a pair, you want to search for a pair, you're just going to come to this search place, search for USDJPY. It's here, and you see all the details on it. And then if you now want to save it, like you don't want to be searching for it every time, you just click on this red thing right here to save it to your red list so that you don't have to search for it every time. And then when you do that, you're going to see it in this area right here, this place. So these ones are the ones that have been saved here, the pairs that have been saved here for me. Now, the important one, not like every other is not important, setting your alerts, because you can't always monitor price movement. You can't sit on your chart 24/7 and say I'm going to be watching how price is going to be moving, right? So, and this is where your setting of alerts comes in. For trades that are sent on swipe option, for instance, or even maybe scalper, or even swipe coin, you know where that left my head. Swipe coin. Sometimes when you open your MetaTrader 4, the prices aren't always there immediately. Sometimes you would have to wait. And for some people, in the process of waiting, they actually miss the entry, the price, because the price will not come and tell you that it has gotten there. But if you put your alert, obviously your TradingView will alert you that, hello, price is there, come and take your what's it called, come and enter the market and enter the trade, right? So that's the essence of using your TradingView, even for TBX trades. So when you get for instance, you get a trade and the price is so far away, or even almost there, and you can't monitor it, trust me, trading alert is very, very effective, and it saves a lot of time, stress. So you just come here, shortcut, click on it, plus it brings up add alert for this pair. Let's say you don't want to add alert for USDJPY, you want to add alert for AUDJPY. Now, without joins. Okay. You just click on it like this plus icon that is hovering here. When you can move your price to anywhere at all. You want to set your alert, just click on plus, add alert for USD, and you're going to see this pop up. So for somebody that is not, for an account that is not upgraded on TradingView, you have access to only one alert. But if you upgrade, you have access to multiple, up to 8 alerts on TradingView. So that's just one of the advantages of having of upgrading your account. And also if you consider trading as something that you want to be serious about, so definitely you want to upgrade your account. And then the next thing also, time frame. So this time frame, just like you have on your MetaTrader, you have your time frames, 15 minutes, everything like that. So the same thing applies here. Maybe you want to do your analysis on 1 hour, you want to change it to 15 minutes, or you want to change your analysis, you want to do your analysis on 5 minutes, you just do it right here. You change your time frame here. This is daily. It gives you this, like more compressed. It doesn't look like a lot is happening. You change it to the 1 hour, and now stretches like different. And then your 15 minutes, 5 minutes for binary and all that. So that's that's for that. And then the indicators also, this one, in case you want to change your candles, you want to use line, chart, line, or you want to use hollow candles or anything you desire, you can change it right there. And your indicators, now this one is also definitely part of technical analysis. Remember, like the ending part of the PowerPoint that was showing, the presentation I was showing, it showed the moving average, and okay, I didn't specifically write indicators there, but indicators are also something that are used in technical analysis as your, should I say, like an added advantage, like something to shows you, like there's the right word for it, but it's not coming, like something that shows you that your analysis is correct. So there are different kind of indicators that you can use depending, but I'm not going to recommend anyone now, but as you progress in your trading, you are going to understand how to use the specific indicators that you need to use. But the ones that I like to use, like the EMA, of course, I mean, you want to understand how the candles have moved. EMA is basically moving average, exponential moving average, and then you have the ones that something like this one now, something like this EMA, it shows you the candle movement of 20 days, 50 days, 100 days, 200 days. Let's say you just want EMA indicator of maybe like 50 EMA. Let me search for 50, any EMA, any indicator you want to search, this is where you do it, 50 EMA. And of course, you can favorite any of your indicators. And even your tools also, you can favorite your tools so that they just pop up whenever you need it. You don't have to search every time you come here. So EMAs can also be used as a confluence in your trading, your technical analysis, because it can act as a specific, it's not, I'm not saying you should use it, I'm saying as added. After you've done your analysis, you can now look at the EMA, like it shows you that, okay, the market is probably in an uptrend or downtrend. When the market is in an uptrend, what do? You are buying an uptrend and you sell it downtrend. You don't go against the market, except you have like $1 billion you want to put in it, then you can do anything you like. So it just, the indicator shows you how, like it can show you that, look at it right here, when the price got here, it rejected. When the price got this side, it bought up, like it moved up, and then it acted as a kind of a support here, but it could not hold it, it lost it. Now it's not a what's it called, a resistance. So it can also act as something that you can use in your analysis as a confluence. Okay, I think there's a question. The person sent it to me as a direct message. Do we have all these tools on our MT4, or do we do it on TradingView and come to an MT4 to execute trade? You execute your trades on your brokers. TradingView, you use it to do your analysis and to set alerts, but your trades are executed on MT4 or your binary brokers. Binary brokers like IQ, that's what I mean by binary brokers. So I believe I've answered that question. Billion says, I believe you will see a redirecting purple. Yeah. If you want to set more than one alert, it's going to tell you something that you need to upgrade your account. I think I already set an alert. So let me try to set another one. Yeah, never miss a trade with us. It just shows you that this account is not upgraded. So you just click on it. You can start with a 30-day trial. It's free, and then subsequently you'll be charged for it. So it requires payment. So you're going to have to pay for that. Okay. Okay, guys, you can ask your questions before I move to the support and resistance, which is going to be the last aspect of today's training. I hope everybody has gotten one or two things so far. Please, if you have any question, you can ask. So I'll just proceed to the next one. How did this happen? Did I open? Okay, yes. I opened another app. Any question, guys? Shoot me. Shoot your questions. Okay, none. Let's proceed. Okay, now support and resistance, which was where we stopped at. So we're going to go back. Support and resistance are proven areas where buyers and sellers find some equilibrium. I think I already explained this. And it's also referred to as a floor and roof. Like the way you are currently sitting right now, you are not hanging in the air. You're seated on something. So your floor, where your feet is touching is acting as a support for you so that you don't fall down. And you're not on the moon. There's gravity here. So your floor is your support, and then the roof or the ceiling, wherever your house is, that you can't go beyond, even if you jump from here to eternity, or except you want to break your head, that's your resistance. That's the same way it acts in the market. Like the market has a place where it's holding, and it's holding the buyers. When buyers got to, it held them, so to say. And then your resistance, when it got there, the sellers could not go beyond that level. So that's just the support and resistance. And I put this one here as a little, should I say, like, I don't know what, like a support can also be a resistance depending on where you're looking at it from. I'm going to explain when we go back to trading view. And that's where price action comes in. As a technical analysis, as a technical analyst, price action is something that you need to have an understanding of, trading. And okay, yes, so let's just go to, so there's more notes. I'm just going to go to our trading view. Okay, RSI and stochastic are also indicators that can be used on trading view, obviously. So just depending on the ones that, like I said, I can't recommend any. I'm not sure I can recommend any right now. Maybe I can. I don't know. So you can also just go to your indicators and search for it. RSI. These are the ones I use. Sometimes, you can just check them. But if you are, for instance, if you're on the CBX or you're on the elite package, you know that Market Trap comes with its own RSI and stochastic. And trust me, Trust me when I say, I'm not even trying to front. I'm not trying to like maybe sell anything or whatever. Trust me, that RSI and stochastic is just different. There is something that it has that it's not on TradingView. I know you can get it here, you can get something that looks like it, but it just has its own thing that TradingView doesn't have. So, okay, that's where levels, I'm not familiar with level strategy. I use Market Trap for my TBX, for trading binary and Forex. I use Market Trap. Okay, so we're talking about, I think I already answered that indicator question. Market movements. Let me take this off. So if you want to stop your alerts, actually, you can just tap on it, double tap on it, and okay, actually, not double tap. Oh yeah, delete. There's a way. Yes, stop. You can do stop, or maybe you want to edit it. You want to move the price away. You can just do like this. I did left click. No, sorry, right click, and you can see stop, edit, remove. If you want to remove it, it goes away. And then edit to change it, stop entirely. You don't want it anymore. So if you want to move you can also do like manual moving, like with your cursor like this, and it moves. Let me cancel it. Let's say you want to bring it here. Pops up, you save it, it's done. Okay, so I'm going to stop the alerts now. I just want to cover the last part, which is the support and resistance and a little bit of price action, like understanding of what price action means. So in trending markets, like I already explained that for you to identify a trending market, it needs to have a defined direction of an higher high and higher lows. That means it's creating higher highs in higher lows. This was trending up. It was moving upward before it now got to this place, consolidation. So this is where the market phases comes in, and that's why you need to have an understanding of where you're trading and how to trade each market, because how you trade a trending market is different from how you're going to trade a consolidating market. And if the market moves like in a way where it has broken out, let me take this indicator away, out of a particular movement that was forming. So let's do something like this. You also need to have an understanding of how to trade that, and that's what we call a breakout. So let's say here, this market was consolidating here, so to say. You can also put a line here. This one's okay. Yes. And then this was the resistance. This is the support. This is a support. When you're actually trying to identify your support and resistance, wicks are also important for, at least for most. You can't ignore it. You can't say, yes, it's just a line, a small line after the candle. This is what I mean by wicks. This long thing that, or long or short, depending on the candle types. So these things, lines, apart from the body, that's what I mean by wicks. Let me just draw it again, in case there is somebody that needs it. So this is the body. This is a candle body. Candle body is now big. This is a candle body. And the vertical line is placed here. Oh, so long. Let's just use it like that. So this long one here is the wick, and this box right here is the candle body. So like it is applied, like it is showing here in these candles. So as I was saying, you need to take note of the wicks also, because price got there. You can't just entirely ignore it and say because it's just a tiny thing, I'm going to leave it. You have to take note of it. So what you can do is maybe I'm not going to cheat. I'm marking up chart, but when you start doing your chart markup, you can just do, that's where the zones come in. That's where you can now use this to identify your body and your wick. So I'm going to proceed now. This, when the market got here, this is a support, and it's a support because you can see that market was coming down, it's selling. This red is a sell. It's selling, got here, they stopped for some reasons, and it started moving up. Then it got here again, rejected. It started selling, coming down, did some up and down in this area, came back to that particular place that he held before. And then what did he do? He respected it. He respected that place and started buying back up again. And then when he got to this place again that I rejected earlier in this zone, he rejected again. He understood that something is there. So this is what I was talking about earlier, that market isn't going to do something like foreign. It's not going to bring a data from heaven. It doesn't formulate data. It does the same thing that it has done before, but you just need to understand what it has done before so you can act on it and be able to, decide for yourself what you want to do. So it rejected, yeah. So we tried to break it. It didn't break it. So this is obviously a clear resistance. It sold down again, came up, then it broke it up a little, then eventually, I think I need an arrow. I'll take it. Eventually broke out of that place, and this is what we call the expansion phase. So in this place, the market was consolidating, like it was moving in up and down, bouncing up and down, and eventually broke out of it as an expansion, and it came down nearly. It was trying to nearly come. This my support and resistance is not entirely perfect. There's still some minor ones, but I'm just focusing on this one. So it tried to come back down a little bit to that zone, but it started consolidating. Look at it when it got to this place. It respected this zone again, because right here was a resistance. It acted as a support here, then came to test it again as a floor, respected it, bought a little bit, and then continued. And this can go on as look at it, just it kept doing the same thing like that. So the way you're going to trade this market is different from the way you're going to trade it when it did this. So for some people now, let's say that, okay, one of the ways you can trade this market, like, okay, let me just chip this in. Somebody said they can't see my screen again. Please, can everybody see my screen? Please, if you can see my screen and you're still following, please drop 77 in the chat box. Okay. Thank you, John. Is anybody still here? Are you guys still following? Okay, great. So please, if you can't see my screen, try to fix it. I think it's from your side. So the way you're going to, one of the ways that you can trade this market, for instance, is, okay, you want to, if you're able to, once you're able to identify the clear resistance, like, okay, yes, the market got here and sold. Market got here and sold. So what that means that when price comes there, you can sell again. That's what it means, because market is going to respect its resistance. So you can take a sell from it. If it comes to the floor again, it's going to respect it. It's not just going to like disrespect it, so to say. So you can take a buy from it. That's one way. This is not, we are not even doing no indicator yet, nothing. So it's going to just, this is just pure like, and I'm looking at the chart. So it's going to buy it, like I'm saying, it's going to buy from it, and it bought. And you can continue to do that. That's just one way to trade it. Now, if it's a market that suddenly it broke out from that zone that it was doing sideways from, some people, I remember when I actually, it used to happen to me, all of a sudden I see this green candle, I'm like, yay, market is ready to buy. And then I jump into the buy, and immediately market starts selling. I'm like, why? What did I do? Like, why are you selling? Like, isn't this a clear green candle? You know, those are just the beginning days. Like, so it's just at that place, you don't just jump in because market has shown you that it's buying. That's one aggressive way to do it, actually. It's one aggressive way to do it. But what you want to do is, in a market that has broken out, like this, has expanded, you want to wait for what is called a retest or a pullback, because the market will always, it's now, the market doesn't owe you a pullback, so to say, but you can enter when it pulls back to that zone. So whenever it pulls back to that zone, it can be a clear indication that it is buying. Remember, you are just taking data for technical, you are taking data, you are putting it. This is just charting. Okay, I understand that this is a structure. It is an uptrend, and it has broken out, and I want to buy. And it has. I just have to. I could not join the buy because it broke out, right? But you can wait for it to come back to that zone that it broke out from. When it comes back to that zone, you can wait for your other indicators, the things that would determine and tell you that yes, this thing is not actually good for a buy. So that's, you can't just trade it as it's out and then you just join in for a buy and you want to ride it to the moon. You understand? Or maybe it's a sell. For instance, it broke out from this sell and you say, okay, let me start selling. You may get lucky actually, but if you want to have, you don't want to be a lucky trader. I mean, that's just, you know, a lucky trader is somebody that is, you are just, you know, you're getting lucky and luck doesn't run for a while. So what you want to have is something that a proven strategy that you know that you can always use over and over, like it's tested. So that's where you want to understand some of these things from. So look at it right here. Tested, it respected, it bought a little, not so much of a little, because if we are looking at it on the 1 hour, it looks like it's little actually, but it's not. So it moved up, it came down. It's a floor now, right? It's a floor now. It's now also a resistance. So that's what I was trying to talk about, that a floor can be, a support can be a resistance depending on where you're looking at it from. So let me just cover the last part of the slide to explain price action. In an uptrend, market is moving up, downtrend, market is moving down. Swing point turns to a support level after breakout. Swing point is a previous resistance. When it breaks out of that, it is now going to be a support. So when the market, so this is what price action is. That's exactly what price action is. The previous resistance will now be a support. Now, if the market now moves to the retracement, it makes the retracement move, it's going to respect the previous swing point, which is the support level, right? The previous resistance is now support, current support. It can now represent the beginning of another move. The opposite is for a downtrend. In a downtrend, a swing point, which is like a support level, will turn to resistance if market breaks that price. Once market breaks a support level, it is now a resistance. So when the market now makes the retracement move, it's going to respect the previous swing point that was the previous swing point, and it will now represent the beginning of another move. Too much English. Let's show it again, like I was saying. Okay, let me use, okay, I'm on the 15-minute now. I'm going to use use 1 hour. So once identify places, for you to just identify support, just look at where market got to. If you don't understand what support is, or maybe you are still struggling to, to perfect your support and resistance, just look at the places that price got to and reacted, whether as a buy or as a sell. that simple. Like it's as simple as that. Look for places where market got to and reacted. Market got here, reacted. Market got here, it reacted. I just want to mark all of them. It got to this place in the past. I'm going to mark it. Reacted here. Reacted here because it sold. Use it as a green color, put it as a word. Put a little bit of mark here. You can actually have multiple support and resistance. There isn't, cannot multiple. I'm doing that. Oh, somebody said they don't understand. There's going to be, there should be a recording. It's still recording, right? Yes, so it should be available. Okay, so I've marked out these ones. In this place, I want to talk about swing point and the resistance. Okay, right here, it was a support because it was holding these prices, even though it was dancing into this zone, but it was holding it till it broke out and it came back. It didn't totally respect it. It sold off of it. Maybe at that point, JPY was super strong and everything just sold off. So when the market came back up a little bit in this place, it rejected it, even though the rejection wasn't major, but it still rejected it. Then it bought up again and came down. I hope this is clear for everybody. Like it's just, it looks like, I don't want to say self-explanatory. It's just market doing the same thing that it has done before. Whether on the, depending on, on the time frame that you've done your analysis, it's just right here, the market was, I'm looking for a place that market turned. Another clear example. Okay, this was almost a resistance. This blue one that I just point. So I think this entire zones, I can put it like these zones. Right here. I don't want to click. I can put that these zones. So yeah, the market was rejecting it. It was a swing point. When it came here again, it rejected it. But when it moved up, it started holding it as a support. So right now, the swing point is now, which is the resistance, is now a support for the current market, for this current market. Let's assume that we are here. So it's now a support. And then even though it tried to move down for liquidity, looking for liquidity on this lower price level, it still respected it and held it as support and moved up. So in this place right now, this is simply what price action is like. Once a level of support becomes a level of resistance becomes support, vice versa. So this resistance right now, once that's broken it out, like prices has pushed out of it, is no longer resisting it, it's not rejecting it. It has pushed out, sellers has overpowered that zone. It is now serving as a support. It automatically turns to a support. So what does that mean? If you now want to go for a buy now, so let's say you could not immediately go out of this breakout price. When the price broke out, you could not buy. You can wait for the price to come back to retest that zone and then go for a buy, because ultimately the price, the market will now respect it as a level of support. So when you now add other things, other confluences to your charting, it can now tell you whether this is a right buy or you need to hold off a little bit. So when it comes there, it respects it as a previous resistance, now a present flow, and then it bought a little bit, continued to hold, and eventually pushed up from here. And when it came to this place, it could not hold it anymore. That's just, I don't want to go into deep into why all those things are happening, but you can see that it could no longer hold it anymore. So if you wanted to go in for a buy here, you most likely would have been caught up, because at this point, this support was no longer strong enough to hold the prices. So it sold off, then came back into it, pushed up a little, and tried to act like a support, but it's no longer supporting. So basically, this is just what support and resistance is and what price action is. Just understanding, if you want to identify your support and resistance, look for the places. Let's look at another pair, and that will be the end of the call. Look for places where market has bought before. So if you want to say, for instance, if you want to do a price action movement on a trade, like you don't just want to enter on a breakout, you want to wait for price to retrace back to it. So you just identify where it broke out from, look at it if it was a previous swing point, and then when market comes back to that zone, you can make your informed decision whether you are going in for a buy or a sell. In this situation, support. Resistance here. Right here. I'm just looking at places where markets, okay. Market has moved before, and I'm putting the line on it. This line there, yep. Resistance. Resistance here. Resistance here. Try to support it here. Support here. Support on this zone. When price came to it in the future, it rejected it. It's not acting as a resistance. Support here, resistance here. So basic, and of course on your smaller time frames, that's also how you do it. And if you want to, you can start practicalizing. You can even start using it for your binary and say you want to practicalize. And this one is no indicators. Of course, you're going to be doing it on your demo. You're just trying to see how market is buying from support and resistance. What's happening? Is he doing it right? Is he respecting it? Is he not? Just see it for yourself, because market won't do anything that it hasn't done before. This is a smaller time frame. I can bring it down to the 5 minutes. This is 15 minutes. I can bring it down to the 5 minutes, and then try to just make it say, okay, what did the market sell before? It sold here. It's held support here. And then I can say I'll wait for it, because when it comes to trading, you gotta wait. Like you're going to be, it's a game of patience. You can't just jump in at prices when it's looking like it's moving up or when it's like it's moving down. So the price is here. You can say, okay, let me see if the market comes to this. This is also there's a tiny resistance here. This is a smaller time frame, guys. There's a tiny resistance here. I can say that I will see what the market is going to do here. Will it reject it? Will it hold? Just practicalize and try to see if it rejects here, if it comes to this place, see if it's going to buy, and then take it on your binary just to see just to have the experience and feel of it. This is a resistance. Market is trying to see if it's going to support it. It was a 5-minute resistance on this zone. Yeah, I can do this, or I can bring it here. This is the close of the body. Opening of the body rather, and the wick is here. So the market is trying to kind of respect it, like it's buying from the previous resistance. So you can just practicalize it to experience it for yourself. And this is just simple support and resistance, no indicators, nothing. And then, of course, when you want to, you still have to understand that for you to have better understanding and full understanding, We have resources here with the educators, yeah, all the educators on any of the academics that you are. We have resources for you to learn and understand better and support and resistance. So this is just an introduction and a basic first class. And for people that, is there any new person on the call? Like maybe this is your first week or your first month in the academy. Please signify in the chat box. You can just drop one once in the chat box. Is this your, like your first, you are new basically? A month, a week. One, Oma Umi and Oma Lara, awesome, welcome. Welcome. Yay, Felicia, welcome. Great. I hope you guys, oh, Glory, nice. Welcome, guys. Ume Chiamaka, welcome. I think I should have asked this question in the beginning. All right. Welcome, guys. It's so good to have you here. Thank you for joining this call. And I believe that you've gotten value so far. And let me stop recording. Give me a minute, let me stop recording.